What's going on, guys, and welcome back to another video. So for those of you that are living off your retirement savings, trying to make money by investing into the stock market, and those that just want to put money away for the future, you need to understand that right now the stock market and the crypto markets are about to get worse. In this video, I'm going to explain how the Federal Reserve screwed up and how stocks and crypto and this crash will get worse. Keep that in mind. Things may look a little bit better, but they will eventually get worse. And I will explain why in this video. So first, the Federal Reserve did something recently that nobody was really expecting. And this has actually caused the markets to completely sell off. And to make matters worse, many investors were actually flocking towards recovery stocks a little early. Now, I addressed this earlier this week, how recovery stocks, that's something I'm looking into. I'm not buying all of them. There's just a certain few that I'm picking up here and there because they are pretty much down at like rock bottom prices. But according to financial experts, the sell-off will eventually happen within the recovery stocks as well. And I want to address that in just a minute. And towards the end of this video, I will explain what I'm doing, how I'm investing, and what you may want to consider as well. But keep in mind, when it comes to the sell-off that we're seeing right now in regards to the industries like tech, we're going to see a delay when it comes to other industries like the recoveries. So just keep that in mind as you're investing. Now, I talked a little bit earlier this week on the Federal Reserve, what they did this week, and that really sent the stock market on a wild ride, on a frenzy. But I want to explain a little bit more about that. First, the Fed is now predicting that inflation is going to last longer than originally predicted. That's not good. It's because of this change in vision, though, as soon as they stop buying bonds and mortgage-backed securities, then the big change is they plan to sell off their assets. Now, the last time this happened, last time they did this, it took them about 2 years to offload this. However, this round, the big issue this time around is that they're going to start doing this immediately, which means possibly in the summer of 2022. So, now that we know what the Fed just did, let me explain why this is bad for tech stocks and crypto. First, I know you'd assume that inflation is good for things like stocks and crypto. Crypto is supposed to be a hedge against inflation, right? But this is actually not the case. Let's just jump into tech stocks and why this is hurting them. Tech stocks tend to have a higher multiple when it comes to the price to earnings ratio, the PE ratio. And the higher multiple the higher multiple there is right now, you need to understand that the reason why we have these in tech stocks is because we value these companies much more in the future. So technically, we're pretty much paying a premium to own a part of this company years in advance, even though the innovation, the technology, it's coming later. But that is where the problem lies, is we are investing now for something in the future. So, in today's market with extremely low interest rates, it makes it so easy for a company like Tesla, for example, to borrow and grow. But when it comes to interest rates, when the Federal Reserve decides to raise interest rates, this is what happens. Tesla and other tech companies, they will be able to borrow less money then. They're going to borrow less money. This means they will likely grow at a slower rate. And if investors are worried about the potential growth of a company, they tend to evaluate the benefits of investing into that company and their stock versus a bond, which has a more guaranteed rate of return. So, let's talk about crypto, mainly Bitcoin for a second, and then we'll tie this all together. When we are worried about inflation, and with the news that the Federal Reserve will soon be offloading their assets, it makes much more sense to get away from some of the riskiest assets out there. Crypto is one of those assets. And it makes more sense to move your money into a safer, more guaranteed investment. And the other reason why Bitcoin and crypto in general is actually dropping is because the value of the dollar will get stronger as interest rates increase. That is the big thing. The value of the dollar has pretty much been beaten down over the past couple years, but as our economy is growing stronger, as we raise interest rates, right, as inflation comes down, what we're going to see is the dollar is going to get stronger. So right now, everything is really in question because we don't know for sure when the Fed is going to raise interest rates. We don't know when they will begin selling off their assets. And so that puts a lot of things in question. And so investors like you and I are looking at this and thinking, well, when should we invest? When should I buy into this company or that company? And that's creating a big issue for investors because we don't know. So here's my advice. Be patient. Don't rush into an investment just yet. I believe we have yet to hit a bottom in this market, and I believe that we could be a little ways away from it. We may not even be close. I addressed yesterday how back, I think it was like 2009 or 2010, whenever, I ended up picking up American Airlines for like $3 a share. Picked up 250 shares. And in 2015, it shot up to, it was a little bit over $50. I sold right under $50. And I turned a $750 investment into over $12,000 in 5 years. It was a 1,500% return on investment. But it was because I was patient. I didn't worry about if it was riding up and down throughout the days or weeks or months, even the years. I just wrote it up and I sold. So here's what I'm going to be doing. And this is just what I'm doing. You do not have to use this advice. You do not have to, again, this isn't financial advice. I'm not a financial expert, okay? I'm not no consultant, okay? So use what I'm doing, okay? And I'll address this in the future as well, kind of what I'm seeing. But this is what I'm doing. As I see opportunities to buy during the day, I will day trade a stock over the next few weeks. But keep this in mind. I do not plan on holding any stocks overnight in my swing trading account. I just don't. My strategy going forward over the next probably month or two, I will pick up individual shares of companies. I may do some call options as well. But, and I'm not really going to address that here because that's more speculative and I don't want to get anybody really in trouble as far as their portfolio values. But what I'm going to do is I'm gonna trade stocks daily. I'm gonna do some day trading, which I usually don't do. But I see right now that stocks keep on falling in different ways. They will fall. They will take a little bit of a dip up before they fall again. Most just don't keep riding down. So what I plan to do is I plan to watch a few companies, especially over the next week or two, especially leading into right now. I think this coming week we got some earnings reports coming out as well, so that could be big news also. So I plan on buying into some of these. I also told you guys last week I rebalanced my long-term portfolio, and I moved more heavily into companies that I really like. I have a high conviction about. I sold off on a bunch of stocks in companies that I wasn't 100% on, and that's fine. Some I gained, I had a decent amount of profit. Others, I lost money, but oh well. As of right now, this is just where I'm at. Looking at my portfolio this morning, I'm sitting on about 35% cash, and I will be adding to that cash every single month. Okay, as I get paid from YouTube or Amazon or my affiliates or whatever other businesses, I will just keep adding to that cash position and putting cash on the sideline, because I will start buying at some point. When I see the time is right, I'll start buying. And when I feel we've reached the bottom and we have somewhat of a confirmation of a solid rebound, I'm not going to time the market perfectly right so that once we hit the bottom, I'm going to just go all in. Nobody times the market perfectly right. As soon as it drops, I'm going to look for a confirmation of, are we going to see a rebound? If I start to see confirmation, if we have some positive catalysts, I'm going to go in. I am going to jump in with both feet. And when I am certain that this is the bottom, and I don't know when that's going to be, but when I'm certain that we've seen the bottom and we're riding up, I will most likely go into margin. I will not go heavily into margin, but I will go into margin. So that's what I'm doing, but I just want you to understand, the Fed screwed up. The Fed screwed up, and I believe the Fed screwed up mainly because the Federal Reserve Chairman, Jerome Powell, he was not sure, is he going to be renominated for that position? Well, President Biden selected him, and ever since he was selected, he has completely switched gears and changed the direction of where he was once going. So it's going to be interesting to see what happens moving forward, but what I can tell you is I will be investing. I am not scared of this market, but I will be patient and I will be cautious. That's my advice to you. So if you have any questions whatsoever, please ask your questions down in the comment section below. Just wanted to thank you guys for watching. Just wanted to show you this because I think a lot of people are thinking, I'm just going to buy the dip and I'm just going to make a boatload of money. Well, if that dip keeps on dipping, do you have the money to continually buy? Most people don't. That's the problem. So just wanted to share this with you. Hopefully you have a wonderful rest of your day. Consider subscribing, and I'll see you guys on the next one.